Welcome to Momentum Monday. Today is September 20th, 2020. Happy New Year's to all my Jewish friends.
You don't have Jewish friends.
I do quite a few Jewish friends, actually.
You could pass for Jewish.
Absolutely, I agree with that.
You have that surly face. Well, the hair is a giveaway that you may not be.
For sure, yeah, but who knows?
All right, a little volleyball today there, Ivan?
No, not today. I only play Friday evening in a small group, so not too much.
All right, let's hit it. What are we seeing?
Hit it. Let me share my screen. So last week we talked about how some of the momentum leaders in tech were looking a little vulnerable, and some of them broke down a little bit, but nothing too serious. And I don't think it's the beginning of a big correction or anything. It's just a normal pullback consolidation after a big move, basically since April. So Shopify, Spotify, like all of those big leaders kind of.
Well, they've gotten so far away. I think we talked about this about a month ago. Things were so far away from their 200. You know, I was selling some Apple and I was selling some Zoom. I mean, Zoom hasn't slowed down, but Tesla had gotten so far away from the 200-day moving averages. And it's just over a year or two, they just always end up touching them or getting much closer to them. So, you know, if we stop here, at least the 200-day moving averages will start catching up to where these stocks have run. So sideways was the best thing that could happen. I've got a little bit of a pullback relative to the 200-day moving averages. And, I mean, the index was so stretched from the 200-day moving average there. So,
yeah.
You know, I don't know what people were thinking, but it's just not the way markets. Maybe stocks can do that, but with the Nasdaq, it was just, or the Nasdaq 100 is just, it was unsustainable. And here's what you got: you've given back a couple months of gains quickly. We're still really stretched from the 200-day moving average, but at least you have something to lean against. You know, 10 or 15. We're still 20% from the 200-day moving average. So we're almost 40%. So
typically in a strong bull market, you don't really need to test it.
No.
Once you start testing the 200-day, I mean, we're not really talking about a strong bull market. So
absolutely not. You know, markets need to start showing some strength here again. Absolutely. And I'm waiting for that. I'm not trying to buy dips right here because it was a great run. I'm just trying to see some strength and some setups emerge.
Okay. So let's talk about that. So first the bad news, you know, real quick. We already mentioned it, how the major indices are already below their 50-day moving average. And also typically the week after the September quote witching, which is like a bunch of option expiration for different time frames, weekly, monthly, quarterly, and that week is usually statistically the weakest for stocks. This is next week. So we might see a little bit more downside pressure. But interestingly, under the surface, we're starting to see, you know, quite a few stocks that are holding well and even trying to break out. You know, I mean, for example, on Friday, Thursday, we definitely saw some of the social distancing stock bounce and show notable relative strength. And you already mentioned Zoom. You look at it, it's still above its rising 20-day EMA, extremely strong. And we saw something similar with Wayfair, which can also be considered like a social distancing stock, Overstock. So all of those stocks all of a sudden are starting to either firm up or just rise a little bit, and which I assume that one of the reasons is the big increase in COVID cases in Europe and also here in the US among younger people.
Yeah, I was just talking to some founders in Spain, and they're about to go into shutdown again.
Yeah. So I'm thinking
Israel shut down. I mean, it's pretty amazing. Like, I mean, we're just, US ain't shutting down. Guaranteed. Maybe if Biden wins, they'll shut it down, but we're not shutting down anytime soon. The pressure is to open up still. Like America ain't shutting down.
Well, we'll see if we see a big spike in cases, because typically when you see a big spike in what they saw in Europe, when you see a big spike in cases among younger people, it takes a few weeks for, to start seeing a spike in older people, as it just moves as the COVID moves, from the clubs and the universities back to the households. So we'll see if we see a similar pattern. But the market is starting to kind of discount that. The other big thing is clean energy. It might be related to Tesla's event. They have some conference.
A battery event.
Or it might be related to the market just discounting a potential win for Biden. But clean energy stocks are definitely showing relative strength, and we saw that on Friday with fuel cells stocks starting to break out, showing notable relative strength. Also, some of the, not all solars, but some of the solars are also kind of holding well. Also, all the electric cars, charging stations, they're also started to kind of perk up or just holding well. And in general, small caps, a lot of small caps have started to break out. I mean, they're much easier to move, and one big explanation could be the big comeback of biotech. I mean, last weekend we saw two big acquisitions in the space when Gilead acquired IMMU for 100% premium, and that basically led to repricing the entire sector. So we saw quite a few biotechs just coming back and starting to set up for potential breakouts or breaking out. So there's definitely some pockets of strength in the market right now. It's not just weakness.
It doesn't take much relative to the FANG money coming out of Google, Facebook, Apple. Tesla's rolled right back into, but it doesn't take much money coming out of Facebook to support the whole small cap. So what you're seeing is just rotation, a 0% interest rate.
Nothing.
Fed says they're not touching things. Accommodative world. You have breakouts all over the world. Money comes out of FANG. It can support a lot of other stocks if that money doesn't want to come out of the market. So it's hard. I mean, listen, it's not as exciting to own transportation stocks. It's not as exciting to own the home builders. I mean, the bullishness on home builders, like how people feel, and the transportation stocks is like, shorting this market just other than for a trade. You have to keep your head focused on like the big picture here, which is rates, and money flows. And it's just too hard. It's just too good. And so tech can go sideways for a year, and this market could rage. If that money comes out of FANG into the regular market, these regular stocks can have a great run. You're pulling up the IPO index here. I mean, nothing between biotech and IPOs, you can just see, I've written about this, there's just not enough supply of good companies. In a world of 0% interest rates, people just want to have stocks. They're willing to take 20, 30% drawdown, I guess, because they don't want to leave their money in cash. And so it doesn't mean you have to do this, and you don't have to chase snow, and you don't have to chase software. There are companies out there, great brands, including the ones that are starting to move. McDonald's, Nike, we talked about last week. That are just starting to break out. When Nike pulled back, we saw, what did I see this week that was interesting? Lulu, I started buying that on Friday. It's not like I think it's cheap or anything, but the mere They've made their acquisition. They've gone digital 60%. Do I love it at 290? No, I loved it at 130, but the gap between Peloton and Lulu is closed significantly. Where's Peloton now in valuation to gap? Peloton is
let's see, 26. Yeah, they're pretty close.
They're getting close. Like I thought in June that they would take 5 years for that gap to close. I'll take that gap. I'll take that Fashology gap back in the Lulu's favor right here. It doesn't mean I'm not long Peloton. I think Peloton's just executing just perfectly, but I'm not going to write off. I still go to Lulu for my clothing. Peloton's a long way from offering fashion, right? They're still a hardware and technology company and software company, and Lulu's still a fashion company. So I think, when you see that, when you see Lulu drop 30% like there, and you don't think the market's going to correct, I added some Lulu. So, there's opportunities. Google, as much as in a bad market, I wouldn't want to own this. In a good market, I just, I'm going to try that here. Down 15% in a bull market. And the news already out about the Justice Department. Now, again, buying weak stocks in a good market is not the best thing to do, but, I'm going to try that here. And in a bad market, no, this would be a terrible sign. But in a strong market, I think money will flow back into this. What else other than biotech, home builders, transportation, international stocks are doing well?
Yeah, it's to see the impact if the US really ban WeChat and TikTok, which I doubt they'll do, but who knows?
Yeah, supposedly he's kind of approved the merger. He's not going to risk the audience a month and a half before the election of millennials. He's already caved 9 different ways. It's a joke. In the last week, he's pandered to just about every type of group. He's just changing his mind every minute. So he's not going to do anything. Well, he will do stupid stuff, but then he'll just backtrack because someone will say, listen, did you realize this cost you this many votes? He's just all over the place trying to catch up. So I expect a lot of crazy stuff out of his mouth over the next 6 weeks, but nothing to change until the vote comes in. And you can see, this is a stock Tencent that should be getting hammered. This should be right. Not TikTok shouldn't be in their sites. WeChat should be. So either this is your last chance to get out. This is a top 10 holding of mine, but I'm looking at it as like they're trying everything to bring this stock down, and they can't. So not adding to it, but I think you can see how strong this market is, or you can't scare these shareholders out of these stocks. So, it's a good 2-year base here that it's, holding above, Ivan?
Yeah.
Yeah, Alibaba too. The 2 leading Chinese stocks just, don't want to give back anything. Baba's stronger than Tencent. I just like Tencent's a little more diversified out of China into Eastern Asia. What else shows up to you? Have you looked at any transportation stocks? FedEx won't stop.
Yeah, FedEx, UPS, those 2 definitely strong. So transportation stocks are really looking good.
Logistics, yeah.
My attention right now is biotech, clean energy, because that's what, and some of the social distancing plays, because this is what I think is hot right now. And since most of my investments are, most of what I do is swing trading, I need to know which sectors are currently hot. So this is where I go. As I said, there are pockets of strength despite the weakness in the indices. And the S&P.
Remember, the weakness in the indices is 5 stocks right now, right? The equal weighted S&P, I forget the ticker symbol, is doing great. So, the last time it did this well was 2009. I forget the ticker symbol, but that much money comes out of Amazon, Facebook, Apple, and at one point Tesla over the last 2 weeks. That can hold up a lot of other stocks. So I think that's the key. And look where Tesla just bounced right off is that the 50-day, Ivan?
The red one is the 50-day, yes.
Yeah. So I'm saying if we roll over here, market's going to go under pressure. The question is, does it stay in other stocks? Where's the small cap index, Ivan?
It's holding a little bit better than the rest, kind of in a range here.
Yeah, not great. I mean, banks are so weak. Morgan and not Morgan, JP Morgan. Yeah. Just can't get any traction.
Yeah.
I mean, that concerns me. Eventually they pull down the market, but they're, with the shutdowns, SPG was looking like it wanted to break out. Again, this is my proxy, and quickly, on volume gave back, those gains. So, I think the old economy, big money is still not convinced that we won't have a lockdown again. And so there's no free. The only thing that we know is that they don't want rates to go higher and that they're going to keep printing money. So I think you have to stay with growth until the news changes around COVID, and we'll just check in every week. I just don't have a great feeling about the next. Where these growth stocks or where the technology leaders bounce. Somewhere in and around here, they should bounce.
Yeah, it's very likely, as you said. For example, looking at Spotify, which kind of break down last week, but looking at this range construction here, like that could definitely be a state.
It needs to bounce. I think Spotify's got some problems there. Again, it's a big position of mine. One is my biggest, is that the employees hate Joe Rogan, so they're saying, you've got more competition. I mean, this was all obvious. It's digesting a huge, huge gain. I hate seeing it kind of give up. But again, it was so extended from its 200-day moving average. If this is the place where it kind of gets a bottom, then it's just a normal little healthy, pullback. So again, like I added a little last week, but you see, this stock can easily go back to 200 in a tough market. But if it goes back to 200, now you got some serious overhead resistance. So I'm looking for this thing to hold here. So it's a key. It should be an interesting week.
Yeah, the same for Shopify and Amazon.
Yeah. Well, Shopify, it just makes sense to me. The growth has invited so much competition. Amazon, it's invited, there's so many DTC companies, there's so many platforms that want to do what Shopify does with the twist. So this is just, they've attracted entrepreneurs to come to the space to either get bought by Shopify or Amazon or take them on with the unique angle of attack on their products. So it's an exciting time. I mean, this is just how markets work. Nothing goes, I think people are seeing again, like if this is the pullback in Shopify and Amazon, all they got to put up with, which I doubt, you're going to see them touch the 200-day moving averages over the next year. It could be because the averages catch up, or it could be because Amazon quickly comes down. So, knowing your field position, buying at 3,600 and buying Shopify at 1,100 in hindsight, with them stretched and perfectly executing from the 200-day moving average, not that smart. Chasing the S&P at 360, turned out not to be great. At 340, I don't know. It's not. If you're bullish, this is a much better spot to try a few names. But be prepared. I mean, banks are weak. Election coming up. There's, the virus hasn't gone away, and there's a lot of distrust out there. So there's a lot of things that could quickly become head to page one that aren't page one. On that, Ivan, unless you have a couple other ideas, I'll leave it there. But it was nice to see the biotechs kind of bounce where they should have.
Yeah, as I said, I mean, the overall market.
I own both. I own the equal weighted and the other one. I own XBI and IBB. That's kind of my proxy.
Yeah, good. So definitely the indices are a little bit weak, but they're pockets of strength. So I think money is just rotating. So that's all.
Okay. Let's see what else. We will talk to you next week. Have a good week, everybody.
All right. You do, Howard.